There are five things that could be on your credit report or that you may have done that could affect your ability to get pre approved. The first thing is purchasing a car. If you're in the market to purchase a car, I would suggest you would speak to a mortgage lender first before making that purchase. I will explain. If you're looking to purchase a home and you also need to purchase a car, you want to reach out to the lender and see how much you can currently get approved for, and also factor in how much you can potentially qualify for if you purchase a car. Now, I'm not saying you can't afford the car and the house, but what I am telling you from experience is that to buy the house first, then the car. I always say you can always get the car after the house, but it's hard to do in reverse because of price of housing, the amount of debt that people have, as well as the price of cars. If you have enough income that will allow for you to purchase a car while you are on the way to purchasing a house, I would still wait because you never know if you need to go up in a price amount, or you never know how much you need, where you need to be at with your debt to income ratio. That is key. That's one of my pet peeves. That's one thing that lenders hate. Just have the conversation with your lender or a lender before purchasing a car if your goal is to purchase a home, honestly, in the next 4 years, 4 or 5 years, because cars, are stretched out 48 months, 60 months, 72 months, sometimes 84 months. So you want to have a conversation before purchasing a car, if your goal is to purchase a house in the next, 1 year to 6, right? Number two, quitting your job. It may be sound like common sense, but it's not so common. So when we pre-approve a borrower, or when we're looking to pre-approve a borrower, we're also going to verify that you're still currently on your job. The fact that you have your most recent pay stubs, and your most recent W-2s does not negate the fact that even though we're using those to calculate income and to verify, we are also going to verify that you're still currently working at that job, as close as to when you're getting ready to close within 3 to 5 days of closing. So you want to make sure that you're still currently working. If you are in the market and you're changing jobs, you want to make sure you let your lender know if there's a gap in between a job history, because we can do a verification of employment showing that you will be working on that new job within 60 days of closing. So make sure you don't quit your job. And if you do, you have a good reason and you speak with your lender to see how that affects your pre-approval. Number three, co-signing for a car. See, we spoke about purchasing a car for yourself. However, co-signing on a car for someone else gives you the same responsibility as the person who is buying the car. If they're late on a payment, you're late on a payment. If they're on time on a payment, you're on time on a payment. Even though car dealers or car salesmen may say it doesn't affect you, you have the same responsibility as that person who you're co-signing for. Now, if you have co-signed for someone, and I'm gonna give you a bonus, right? If you have co-signed for someone and the car payment is being made by them from an account that you're not attached to, and it has been going on for at least the last 12 months consecutively, 12 consecutive months, then you may be able to omit that car payment where you co-sign. But while you're in the process, if you've done that before you're looking to purchase, it's nothing we can do now other than potentially seeing if that person can refinance the car and get you off the loan. Barring that, the steps I just gave you ahead of this comment, where you need to have 12 payments from an account that you're not attached to consecutively, that's a potential way around having to utilize that car payment into your debt to income ratio when you're getting pre-approved for a mortgage. The next thing is filing for bankruptcy. I understand there's times where you've taken on too much debt, you've had challenges, you have credit challenges. However, if you file for Chapter 7 bankruptcy and you're looking to get FHA financing, and there's no house involved, you need to wait 2 years from the date of discharge. That's 2 years from the date of discharge. If you're looking at conventional financing, you're looking at anywhere from 4 to 7 years for conventional financing from the date of being discharged. Now, if you file Chapter 13 bankruptcy, there still is a possibility that you can purchase a home. If you file Chapter 13 bankruptcy and you have made 12 on-time bankruptcy payments, then we can pre-approve you doing something called a manual underwrite. Now, here's a few additional keys. The biggest key is once we have you pre-approved and you go under contract with a home, you have to present that contract and a estimated fee sheet to the trustee of your bankruptcy, and they have to go before the court to petition or to see if the trustee will approve you purchasing the home. If they do approve it, then you're good to go. If they don't approve it, you have to get out of the contract. Now, when discussing this, make sure your lender and your realtor have a conversation of how this process goes, because it's not going to be your typical 30, maybe not even 45-day closing. It could potentially be a 60-day closing. And I know you're going to say, hey, is there any way that we can get this approved in advance? And the answer is no. They won't take it in advance. In order to present it to the trustee, you have to have a sales contract and an estimated fee sheet. All is not lost, but you need to make sure you make 12 on-time payments from the bankruptcy, to the bankruptcy attorney, so that you can qualify for an FHA mortgage. There is no qualifying if you're looking to do conventional or VA. This is a rule specifically for FHA financing. Now, the fifth big mistake that borrowers make that affects their pre-approval is their credit score dropping because of late payments. When you're looking to purchase a home, we want to make sure, as the lender, we would like to make sure that you are paying your bills on time and that you have the credit score that we need to get you pre-approved. Typically, the better the credit score is, the better you off and easier it is to get pre-approved if you check all the boxes for everything else. However, if you're looking to purchase a home and you have late payments on your car or credit cards in the last 12 months, that could very well affect your ability to get pre-approved. There are ways to get around those late payments in terms of having a higher score that we need, or potentially having reserves, but that's on a case-by-case basis. And you want to make sure, the only way to know if you can get approved is allow the lender to pull your credit and work up your file to see if you can get pre-approved. And then he or she can tell you, hey, I can approve you, or hey, I can't approve you. Don't ask them or in a consultation, hey, do you think I can? Because the desktop underwriting system spits out data and every person is going to be different. So to recap, the 5 things that could affect your pre-approval: 1 is filing for bankruptcy. 2 is buying a car. 3 is quitting your job. 4 is your credit score dropping. And 5 is co-signing on a loan, not just a car loan or a personal loan as well. If this video has been help to you, do me a huge favor and give us a thumbs up. And if you'd like to get and learn when we go live or get more of our videos, hit the subscribe button and do me a huge favor. If you have any questions pertaining to anything that I discussed, you can reach out below and schedule a consultation, as well as drop the comments below. And if you want to learn more information on how to get pre-approved for a mortgage using FHA financing, click on this video right here.